G'day and welcome to this week's video. This week I thought it'd be worthwhile revisiting the marginal tax rates to understand the savings we might be able to implement from a tax point of view as we lead into the end of the financial year. It's the 30th of May today as I'm recording this, and so I think it's a really good time for us to understand the tax rates and then be able to do some planning up to the end of June. And next week we'll go through some of the key tax saving strategies and super strategies that you may want to implement prior to 30 June, with the understanding that 30th of June lands on a Sunday. So we need to have our planning, any contributions made well prior to 30 June. So if we just go to have a look at the screen, you can see here that anyone that earns income between zero, this is for this current financial year we're in, from 0 up to 18,200, you pay no tax whatsoever. From 18,000 and a bit up to 37 grand, you're paying 19%. We need to remember we add Medicare levy to this, and from 37 up to 90, and this is where it's changed quite a bit in recent times and will progressively increase as well. So from 37 grand up to 90 grand, you're going to pay essentially 34.5 cents on the dollar. Get up to 90 to 180, it goes to 39%, including Medicare. And once you get over $180,000 in income, and lucky those that are, you're going to pay 47%. Now, the reason why I'm highlighting this, everyone falls into a particular bracket. A lot of accountants work out an average across the income, but the way I like to look at it, that say anyone that's on $100,000, the money that you make between $90,000 and that $100,000, you are going to be taxed at the higher tax rate of 39%. So from a salary sacrifice and tax planning point of view, we know any money that goes into superannuation at those income levels are taxed at 15%. So that's a nearly 25% tax saving, which is just can't be sneezed at, or 24% tax saving to be absolutely precise. So really you need to assess what is your highest tax rate and compare that to the superannuation tax rate. When you put money into super contributions tax, it's 15%. So that's the way that I want you to think. I don't want you to think averages across the board, but if you sneak over into a higher tax bracket, that may well be an opportunity to put money into superannuation and save some tax. Now, for those that earn over $250,000, including their super contributions, they will pay an extra 15% and pay 30% into superannuation. So it's not as attractive, but it still is going to save you 17 cents on the dollar. So still absolutely worthwhile. So please understand your tax rate. Please understand what the top tax rate that you're paying, and then any superannuation strategy thereafter can be in line with that, and exactly what saving you're going to make by making a super fund contribution. Thanks very much for listening. If you like our channel and find some of this information helpful and saves a bit of tax, or some good investment ideas along the way, please subscribe for those that already have. Thanks very much, and we'll catch you next week. Thanks for listening.